A tentative peace agreement between United States and Iran has sparked a broad rally across global financial markets. Investors welcomed reports that the deal would keep the strategic Strait of Hormuz open, thereby reducing fears of a prolonged disruption to global energy supplies. The prospect of lower geopolitical risk triggered a sharp improvement in market sentiment, sending equities higher across Asia and lifting US and European futures. Japan's Nikkei gained 3%, South Korea's benchmark index surged 4.3%, while futures tracking the S&P 500 and Nasdaq also moved higher as investors rotated back into risk assets. The biggest market reaction came in the energy sector. It was Brent crude that dropped 4% to around $84 a barrel, while US crude fell nearly 5%. Although oil remains above pre-conflict levels, the decline marks a significant retreat from the peak of more than $126 a barrel seen earlier this year. Lower energy prices are expected to reduce inflationary pressures across the globe, particularly for major importers such as Japan and Europe. However, analysts caution that uncertainty remains over shipping regulations in the strait and extent of damage to regional energy infrastructure. The decline in oil prices is reshaping expectations ahead of a crucial week for global central banks. Policymakers in the United States, UK, Japan, Australia, and several other economies are due to announce interest rates decisions. With energy-driven inflation risks easing, investors are scaling back expectations of further monetary tightening. US Treasury yields moved lower, the dollar weakened against major currencies, and gold climbed nearly 2%. For central banks, the peace deal offers a potential reprieve from the inflation shock created by the conflict, although officials are expected to remain cautious until the durability of the agreement becomes clear.